It's about that time of day again. Back in the action once again. Happy September to you all. It's Tuesday evening. It's September the 3rd, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, in case you forgot from last time, I know it's been a while since we've worked together. Don't forget, guys, I help traders find high-quality trade setups using a very simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. I have a very important job tonight. My job tonight is to identify the best levels of support and resistance, the best entries and exits for tomorrow, and don't forget, also the most important traps to avoid on Wednesday's trading session. And in the video tonight, we're going to cover a lot tonight. We got oil, S&P, Nasdaq, gold, and of course we'll wrap up on that mighty euro. And of course, I'm going to jump in here on oil tonight. That black gold, that Texas tea, those crude oil futures, it looks like oil, among other markets, are trying to get what I call a snap back, which happens over a holiday weekend like we had last weekend. Let's jump into that oil here real quick, and let's talk about kind of my vision here for tomorrow's trading session. Now, of course, it all starts with that Monday session, right? The first couple drops of the month of September. That was a holiday, right, on Monday, Labor Day holiday in the U.S., and there were, of course, various different holidays, different names for them, but, different stuff around the world. So a lot of people were off on Monday. And then, of course, we come in this morning, and over the weekend, there were some headlines from OPEC. And, of course, those headlines basically said that they were planning on increasing production into the month of September, October, right, and November. And that apparently got everybody worried about oil prices and sent this market lower. I was laughing about this in the room this morning because it's the first time of everything I've seen, I've been doing this for a long time, it was the first time I've seen oil go down when a hurricane is barreling towards, right, the southeast portion of the United States. Apparently the market knows more than we do, or the Weather Channel knows about the intensity of that hurricane. But the bottom line, though, is that now you can see, right, that bearish market didn't last very long, right? They get a beautiful 1, 2, 3 reversal. And boy, that's a real strong push off that moving average. These bulls have control of this market. But where are they trying to go? They're probably trying to go right back to where this whole week began. And this happens a lot when you've got a holiday weekend, right, where there's a Monday holiday. And, the markets are open, right? They are tradable on that day, but nobody in their right mind would trade them that day, right? What happens is on the first day we open up, the market rolls lower. Oftentimes, it'll come right back up, right, to where the holiday session was. Almost as if to give you a mulligan or a redo in case you weren't at your desk on Monday morning. So that's what I'm anticipating here on oil. And it's not just oil, it's a lot of these markets here heading into tomorrow's trading session. So we know right now, at least on oil, we know we're bullish. And my job right now is to find some key levels of support. I've got a couple levels here I'm watching, and of course I'm looking to be a buyer here, right, at some areas of support now. Now ideally we get that pullback here, and we'll talk about a couple specific entry patterns I'm looking for on oil. But for the most part, though, if we get the pullback, I have a couple patterns I'm watching for here. We'll talk about those tonight. Or do we continue to run higher? Because if we get that short covering rally, this could really be a strong move higher. And I've got a couple patterns I want you guys to keep your eyes open for as we make that rally going back up into that range tomorrow. I'll also talk about if the market turns bearish, at what point will I feel comfortable being a seller again? We'll go into a lot more details on the up, the down, the sideways. We'll cover them all here on crude oil. So definitely stay tuned if you're an oil trader like we are in our trade room. Over on the S&P right now, S&P, as you can see here, is a lot different than oil, right? Opened up on Monday, right? Monday, of course, being the first day of the month of September. Then, of course, the following day now, right? We really chop around here. So a little bit less than we have on oil, and you'll see gold and euro here in a moment as well. E-minis are sideways, right? The first thing I do every morning whenever I open a trade room is I always try to figure out what type of market are we dealing with. Is it a range-bound market or a trending market? And this thing is a range-bound market right now. Little bit of bullish, little bit of bearish. Range-bound markets always tell us actually three things, right? Buy low, sell high, and avoid that middle, right? How do we buy low? I've got a couple entry patterns to watch for to buy low. How do we sell high, right? Same thing. We'll talk about the most specific setups I'm watching for here to buy low, sell high. What would a breakout look like? Yeah, we don't trade breakouts. Real traders who trade real markets, they don't trade breakouts, right? Because most breakouts fail. But at what point would a breakout be successful? We'll talk about two breakout patterns tonight on the video. S&P is very similar here to the Nasdaq. Nasdaq is almost a carbon copy of the S&P. There's one difference, though, here on the Nasdaq, and I kind of gave you a little bit of a heads up right there for it. I'm going to talk a lot more detail of what exactly is different and why it's important. But as you can see, the first question you want to ask is, what type of day are we dealing with? Are we range-bound and balanced? Are we trending? And we are about as flat as a board here right now. There's that little bit of a snapback, right? Kind of that mulligan up around that 7,700. Really, at this point, though, we know we're range-bound. I want to buy low. I want to sell high. I want to avoid the middle. And the one very distinct factor about this range is how narrow it is. Now, narrow ranges can be very, very big clues. They tell us exactly what patterns to look for and where to find them. So I want to buy low, I want to sell high, I want to avoid the middle. Then obviously we'll talk about what a breakout will look like and when you can safely trade a breakout, because as you probably have noticed, right, most of these breakouts are going to fail. So we got to stay away from buying or selling breakouts. We do have two patterns to watch for on that Nasdaq, so make sure you stay tuned on that if you're a Nasdaq trader. And then over on the gold, right? Gold, of course, breaking free of that deep pullback right from last week and then running higher here, as you can see. Now, gold is obviously not a range-bound market, right? It's a bullish market, but you'll notice it kind of finished up the session here, flat moving average, higher lows, lower highs. This thing looks like gold is bullish right now, but it definitely looks like gold is a little bit weary of buying as it goes higher, right? Buyers, you can definitely tell, are getting a little bit intimidated by some levels overhead. I've got a couple big levels. We'll talk about this here tonight on the video, but lots of resistance here overhead. I've got myself in a bull market into a trading range. This to me tells me I want to buy a pullback, right? Range-bound markets tell me I want to buy low, sell high, right? In this example, this is a bullish market into a range, so I've got my eyes on, right, some support levels here, and you can see I've got a trend line coming down. I've got reversal lines here. I've got hidden channels, and I've got really three different types of entry patterns I'm watching for here to buy off of that low. I know where I'm looking, but the next step is to make sure we get the proper entry trigger. I'm going to talk about that in a lot more detail here tonight. If you're a yellow metal trader, right, stay tuned for more on that. And then talking about the snapback here on the euro, right? Euro, of course, had the day off yesterday. Or, of course, right, the holiday was yesterday. Not a lot of volume yesterday. And, of course, see what happens now, right? They run it lower, they chop around, and then we get this big blast, right? That big blast higher, right? And we'll talk a lot more detail about this. Successfully breaks free of the range. And now we've got something very similar on gold, right? We got a big blast higher here into what looks to be like a trading range. Now, we know where these buyers want to go right now, right? They're trying to get back to that 10,000. They're trying to get back up to retest the holiday highs, right? That snapback, right? That do-over, that mulligan, right? For those bears here on the euro. But before we do that, though, what do we know? Right? We know that we have a bull market. We know we have a range. What does that tell us? It tells us buy low, sell high, but because there's such a bull bias to it, you'd be foolish to sell this market right now. You want to be a buyer on it. And again, I've got some key levels here I'm watching inside the battle zone. Now, a lot of this will have to do with, as you guys have probably heard me say many times before, a lot of which, deciding on which pattern to use will really depend a lot on how deep is the pullback. Is it a relatively shallow pullback? Is it a very strong pullback? We'll talk about how the pullback will actually make a difference as far as which pattern we want to use and where. So definitely have the goal of buying low right now. But what if the market keeps going higher here? If we keep going higher, we know we have some levels of resistance overhead. There's one particular pattern I always look for whenever I'm concerned about buying high or buying at resistance, and we're going to dig into that a lot more detail tonight on this video. So we're going to be a buyer here on the euro and the gold. Nasdaq and the S&P are very much balanced and sideways, and oil is really screaming at us to wait for that pullback down at those lows. Now, before we jump into the charts here tonight, though, I just want to remind you guys to make sure you never miss another newsletter, and to do that, join our mailing list. Now, you may not be aware of this, but just before I publish this video on our YouTube channel every evening, I send out an email to everybody on our mailing list, and I want to make sure you get that email. All I need from you is your first name, or any name for that matter, a real email address, right? Make sure it's a real email, because I'm going to send you this email every evening when this newsletter goes live, and then hit that subscribe now button. Now, don't forget, guys, when you hit that subscribe button on the right-hand side there, your job is not over yet. You've got to go in and check your email. I'm going to send you a verification email so you can verify that I have the right email address. And heads up, sometimes that verification email gets lost in your spam filter somewhere. So check your spam filter if you don't see the welcome email, because that welcome email, I need you to verify your inbox. And I've got a bunch of free resources in there for you that I know you're going to love as well. So definitely join the mailing list. Oh, and one more thing. While you're at it, right, I've got a question for you. I'm always asking for your feedback. I'm always trying to make this the best newsletter on the planet for learning and earning the business of day trading. I have a question for you, though. I talk about a lot of different entry setups on this video, right? Failures, nesteds, crown reversals, right? Failure into pullback combinations. We talk a lot about entry setups in this video newsletter every evening. I want to know from you, though, which of the patterns that we talk about in our nightly newsletter have you found is the most beneficial for your trading? You know, what I find is that most people will gravitate towards one or two of the patterns that we teach in our trading classes or here on the newsletter. I want to know from you, what's been the biggest impact pattern for you? Is it a failure, a crown reversal? You tell me down in the comment section below. Drop me a couple, just a couple sentences on what patterns are your favorite, how they've helped you, because I'm always trying to figure out which ones are best for you guys, which ones you like the best. I know what I like the best, but I want to know what's really working best for you. And maybe you're here for the first time today, right? Maybe these patterns you have no idea because you're here for the first time today. If you're here for the first time today, I have a slightly different question for you. In your experience thus far, what's been the most important trade setup? What gets you into a trade, right? What are some of the rules that you use? I know what I use. I want to hear it from you, though, right? So drop me some comments in the comments section below. If you tune in every evening, what's your favorite setup or setups? And how have they helped you, and why do you like them so much? Drop me a comment in the comment section below. And guys, while you're down there giving me that great feedback in the comment section, do me a huge favor, will you? Hit that thumbs up button, because you know every time you hit that thumbs up button, YouTube rewards me by exposing this video to other traders who can definitely use a better trading strategy. We all know that, right? It's difficult when you're a rookie. And so every time hit that thumbs up button in this video, right below the video tonight on our YouTube channel, hit that thumbs up. Help me expose this lesson to more great people out there, right? Because I want to share the knowledge as best as I can. So guys, thank you so much for that thumbs up. Thank you for the comments in the comment section below. Don't forget, if you have any questions at all, you're always encouraged to pick up the telephone, call that toll-free phone number, or use that live support tool in the upper right-hand corner, because I am always here to answer the call, answer all your questions. For example, A lot of people call the office and ask, how do I get access to your free pass? Or how do I get access to your free trading course? Or maybe you want to know what the best brokers and data feeds are right now, or how much you need to get started in this business. Very, very easy. Call that toll-free phone number. I'm always here to help, and I really love talking to you guys. I always love help answering all those questions, saving you time, saving you money, and getting you where you to where you really got to go here. All right, let's jump into the video for tonight. It is great to be back here with you all. Boy, I missed you guys right over the weekend. Had a great holiday weekend. Hope you guys did as well. But now here we are back in the action once again. We got a big month of September. September is usually a very good month in the markets. Like I mentioned last week, this is the beginning of the fall season. You've got September, October, November, December, and then next year, January, February, into the third week of March. That is the sweet spot when it comes to being a trader. So don't sit on the sidelines through the next couple months. Get started, get trading, actually get a strategy, get a coach, right, and get trading, because just going out and starting pushing buttons on your own, it's going to be a relatively frustrating process. Very difficult to learn this business on your own. That's why I'm here every evening to help guide you every evening on this nightly newsletter. But first, let's jump into the calendar here for tomorrow. Tomorrow's Wednesday. Now, it's going to feel like a weird Wednesday tomorrow because Monday was a holiday. Anytime Monday is a holiday, everything kind of gets pushed back 24 hours. So we normally would get inventories tomorrow, right? Oil would normally have the inventory report tomorrow. We don't have the inventory report tomorrow, though, because that's been pushed back to Thursday morning at 11 o'clock Eastern time. So there really isn't a lot on the counter tomorrow for oil traders. We got the international trade number at 8:30, and then of course we got that beige book tomorrow at 2 o'clock Eastern time. Now, honestly, I think both of these news reports are probably going to take a back seat to some of the headlines we've been seeing here. We still keep kind of getting that tit for tat back and forth between the U.S. and the China trade talks, right? We still keep kind of lingering, right, about the Fed and rates. And then, in case you've been living on an island here without an internet connection, there happens to be a hurricane coming, right? I'm sure folks in the southeast portion of the U.S., I'm sure they know there's a hurricane coming. We also heard from OPEC this week as well, and those will, of course, impact crude oil for us as we go into tomorrow's session as well. So tomorrow may not be an inventory day like we normally get on Wednesdays. Again, Monday was a holiday. Push it all back here a little bit, but we definitely have quite a bit going on here for tomorrow. Again, the U.S. and China trade talks continue to get those negotiations all over Twitter right now. That seems to be a boon for the markets. Fed and rates. We got the beige book tomorrow afternoon, but as far as what we know right now, they've all but guaranteed another quarter point rate cut later on this month. Fed Day is later on this month, so we're pretty confident about that right now. We don't expect the beige book to change much about that, but we do know at any moment tomorrow, we get a bunch of Fed speakers, right? Look at these Fed speakers. Fed speak, Fed speak, Fed speak, Fed speak, Fed speak. That is definitely going to be on our radar tomorrow. Any one of those bozos of the Fed, right? They could easily flip this thing over, right? About saying something about rates tomorrow. And then again, we get the hurricane, right? And OPEC. Kind of interesting because the hurricane will prop prices up. OPEC, of course, has told us they're going to bring prices down. So it should be interesting tomorrow to see how all of these kind of all these kind of veins running through these markets right now. We, of course, will be in our trade room tomorrow morning at 8 o'clock Eastern time. I've got my news feed running. Charts will be running. We're going to make sure we don't miss a beat regarding the trade talks, Fed and rates, and, of course, the price of oil as well. So, again, we got some major news tomorrow morning, 8:30 Eastern time, but I just don't think those news events tomorrow are going to be center stage. I think rates, I think trade, and I think OPEC and hurricane are going to be our big market moving events tomorrow. So definitely join me tomorrow morning, 8 o'clock Eastern time. We open up our trade room every morning, Monday through Friday. And we're gonna have another great day tomorrow morning with all of our clients. Now, getting ready here for tomorrow's trading session. As I mentioned in the introduction, a lot of times what happens is the day or the week is a Monday, right? There's Monday. Monday is a holiday. There's not a lot of volume. Nobody's trading, right? Unless, of course, you have to trade that day. And there are quite a few folks out there that do. They have to make changes to their portfolios. They got to manage client accounts. So the markets are open, but they're just not really trading, right? Traders do have to trade sometimes, right, during those days. But for most of us, though, we'll stay away from it. Then what oftentimes happens is we get these big moves during that holiday. And then by the end of the day on Tuesday, Wednesday, Thursday, we find ourselves right back to pretty much where the holiday weekend, right, finished up. And so I kind of call it a snapback, right, or a clawback, or a mulligan, or a redo, right? You can see that's definitely what's happening here right now. Had a big strong move down on oil, right? Big strong move down, and we thought that was strange this morning because of the hurricane. But then after we saw the headlines reading from OPEC, they were actually increasing production in the month of September. We have to assume that basically meant that the market knows, or at least we think the market knows, maybe this hurricane is not going to be as bad. Remember, the market always knows, right? We call it the wisdom of crowds. Okay, very, very important. Remember, the market, I think the market would have priced that hurricane in if it really thought it was going to be that big of a deal. Now, obviously, this does not do anything to diminish the scariness of this whole thing, especially if you're in the eye of the storm right now. I actually have a lot of friends in the Palm Beach, Fort Lauderdale, Delray area, so they're kind of keeping me posted right now. I told them, I said, listen, the markets don't appear to be pricing this in right now, but it's still very early. So we were kind of surprised by that, with that thing going lower. But again, with the OPEC announcement this morning, we kind of knew what was going on. Well, that didn't last very long, right? We then get that 1, 2, 3, and we get this beautiful short covering rally now off of these lows here this afternoon. And so now, just like that, the buyers have it, and we know where these buyers are trying to go, right? They're trying to go back into that range where they came from. Now, I've got a 1, 2, 3 reversal. And anytime I have a 1, 2, 3 reversal, I always start looking for a hidden channel. And so I'm drawing that hidden channel off these highs. I've got it lining up now off of these lows. And I'll tell you, that fits really, really well. And I'm thinking it's going to be looking good here to be a buyer here off the low of that hidden channel. So that's really my goal right now, is to buy at a support level here on the oil market. I've also got this, again, 1, 2, 3. I mark up that high, right? That high is also a key level of support as well at 53.44. And then obviously, too, I'm also drawing a trend line off of that low as well. So this whole area right there is really a ripe spot for a buy setup. So I know we're bullish. I know I want to be a buyer on this. I just got to find a level here to be a buyer at support. So I draw my trend lines. I draw my channel. Now all I need is a pullback here. And if we can get the pullback, that will probably put us below the moving average, which means the first thing I'm looking for is a seller failure into a pullback combination. It'll look like this. Imagine now if the market pulls back to the low of that channel. Even better, pulls back to the 44. If it pulls back all the way, whatever, deeper the better. Okay, that'll go below the moving average. Now, when we go below the moving average now, what's going to happen is all the sellers are going to look at that strong move down, and they're going to think, oh, we failed. Now let's sell it, right? Just give me the money. Make it easy on yourself, right? Nice, easy money going back to that low. The problem is it's not a bear market any longer. It's a bull market right now. And so when I see those sellers trying to sell off that moving average now, right, I now know the odds are not on their side anymore. The odds are actually on the bull side right now. And I'm going to think about, okay, if I was a seller, where would my stops be, right? Or as I always say, right, where's the pain begin? I put myself in the shoes of those sellers. Where would the pain start? If you were a seller and you sold that pullback, where would your stop be? Be right above that high. And that's exactly where my entry will be to be a buyer for a failure pattern. Now, those failure patterns almost always pull back relatively quickly and give us that combination of a failure into a pullback. I mentioned this earlier, right? A lot of my clients like this combination. It's a failure into a pullback combination. I'd love to know what your favorite is, right, in the comments section below. But this is a very, very common pattern. Okay, another pattern to consider would be a two-legged pullback. We bounce off the trend line or the moving average. We pull back. There's two legs now. Draw that trend line down, get up and over, and buy off that trend line. Now remember, when it comes to a two-legged pullback or a 2LP pattern, you always want to make sure there's a little bit of daylight inside, right there, right? You want to make sure there's some daylight there in between the candlesticks and that trend line. You could also look at this as a combination of a failure pattern too. So this could easily be, kind of think of this way, up, back, and go. This could easily be a two-legged pullback. Now, we don't oftentimes get all of them, right? But this could easily be a two-legged pullback, a failure into a pullback, right? Two-legged pullback off the trend line, seller failure off the moving average again, and then, of course, the pullback pattern coming off that moving average. So two-legged pullback, seller failure definitely off that low into a bull pullback as we go higher. What else might happen up here? Well, there might be, we're about halfway, right, off of that move here, a little bit further than halfway. So we may start seeing sellers defend this area. If the sellers do start defending this area and we go sideways up here, okay, and we'll talk a lot more about this obviously with our gold chart and our euro chart, but if we start going sideways up here, right, imagine now we get a bull market and we just kind of start going sideways. Moving average comes over, you know what I mean, right? We start going sideways, now we have a range. Now what do we do? Now what I'll do is I'll take the size of that range, I'm going to copy and paste it down, and find my next buy zone. You'll see these on the charts in a moment here. You'll see what I'm talking about. Once I have my buy zone, and again, I don't know enough about it yet, but eventually here, if we do see it go sideways, we'll get that buy zone. If I can get that buy zone, now I'm looking for what I call a two-try failure pattern. Okay, moving average comes over. I want to see us pull back. One try for the bears, two try for the bears, and then buy up from there. Right? It's called a two-try, in this case, seller failure. The bears try once to take it lower, the bears try twice to take it lower, and we're literally buying right into the stops, into the pain points of those sellers. So not a lot is different there, but the difference is that once you see that range, then use that range to calculate what I call range expansions. Now, the hard part here is going to be, what if it keeps going higher here? Right? What if this thing keeps going higher? If it keeps going higher, we know where it's trying to go, right? We know it's trying to go back up to that 55 area here. And really, guys, there are a couple different things I'm looking for right now. I would say three different patterns here. You ready? Three patterns here. One is going to be a shallow pullback and a jump higher. Okay? No deep pullback, right? Shallow pullback. Let's get rid of this here for a second, just for a second, right? We pull back, shallow pullback, and we jump higher here. I'm going to mark up that high. I'm going to mark up that low and look to buy that pullback from there, right? Spike and channel, basically. Okay? Another pattern is a strong move up, right? Strong move up into what I call a two-try breakout. That's one try for the bears, higher high, two try for the bears. Now, this one takes a lot of strength. The key to this one is that next leg up needs to be urgent, right? Real strong move higher. If I can get that strong move up, profit taking for the first try, bears try a second try, then I can look for that buy now, right, off that second try into those stop losses, right, as we go. The third pattern is going to be if we don't get that big rush higher, if we get a 1, 2, 3 run higher here. Mark up that high, mark up that low, and we're buying off of that, right? We're buying off of that low. And as far as buying off that low goes, right, imagine if we zoom in this area now, there's my trend line coming up off that low. It'll usually be that failure into pullback combination coming off of that low. So think about that pattern, right? Again, imagine it setting up right there, right, off of that low. It's a failure into pullback combination. So again, as we go higher here, right, the first one would be we pull back shallow and jump, mark up the high, mark up that low now, and now we know this is a spike and channel pattern and we're buying off that low. Or it's a strong move up. That gives you that sense of urgency, strong move up, one try, two try, and buy from there. Or it's a 1, 2, 3 breakout, mark up that high, mark up that low. Now we know we have that new channel and we're buying off that low. All right, guys, the only thing I really don't want to do is wait and trade up in this area right here. right? Because that's the range. So if we happen to, for example, just run, right? And by the time you come back from getting a refill in your coffee cup, right, we're up there trading sideways. That'll be a range up there. Wait for that 1, wait for that 2, and we'll buy it up from there. So we got a lot of scenarios to be ready for here on the oil. Hopefully we get that pull back to low of that channel, as I mentioned earlier. And then, of course, we can pin that up there with the right entry pattern from there. Now, speaking of entry patterns, I'm going to go forward now to the S&P 500. But I've talked a lot about different entry patterns so far, and I want to give you a much deeper dive into all of my favorite entry setups. And to do that, what I'll do is I'll put a link up here in the upper right-hand corner for our free trading course. I'll also put a big red button below the video tonight on our trading blog, but grab that pop-up in the upper right-hand corner. Get registered for our free course. You'll learn my 4 favorite entry patterns. You'll learn my 3-step strategy. You'll get an invite to come out and join me in the trade room as a guest. You really can't beat it. Grab that free trading class in the upper right-hand corner. That'll take you over to the website. And when you register, don't forget, when you register for our free course, I'm going to email you access to that free course. So you have to give me a real email address and check your email, including your spam filter. Sometimes that spam filter, right, can keep those emails from hitting your inbox. Let's keep going though in the meantime here. Over from oil now, over to the S&P. The S&P is pretty clearly a range-bound market right now on the S&P. The first thing I always do every morning is sort of figure out what type of market conditions are we dealing with, because markets, they only move one of 2 ways, right? Either trending like a bullish trend, or they're going sideways. And I've got to figure out which is which, right? Are we trending or are we range bound? Are we on a mission to get somewhere, or are we balanced and happy where we are? Those are the only 2 ways the markets move, right? Up or down in a trend, or they move sideways. Okay, so my job is to figure out which is which. And as you can see here today, I think it's pretty easy to see, right? Even after yesterday's session, right? We're pretty balanced, right? Does not look like this market has any idea where it wants to go. So whenever I have a balanced market, I know that I want to use the trading range as the price magnet, right? Imagine there's a big magnet right in the middle, and every time the market goes up, it comes back down. Every time it goes down, it usually comes back up. Now, every once in a while, something will change. There'll be a news event, a natural disaster, a political snafu, right? Something will happen, and the market will break out. Right? We have to wait for that proof, because you never know which breakouts are going to be successful. So when I have a range-bound market, a balanced market, I know the market is balanced. I know the range itself is the magnet, and I want to get out of the range, buy it back up. I want to get out of the range and sell it back down. Now, the most important pattern to remember for a range is a failure pattern. For example, as the market goes lower, I look for sellers to try to sell the pullback. I look for their stops, and I buy into their stops with a failure pattern, right? Something like this. Strong move down, bears try to sell off the moving average, and whoops, right? We're buying it back into the range. Okay, so that pattern is very, very common in range-bound markets. Same thing above. We go higher. Moving average comes over, right? Rookie buyers or inexperienced traders who don't realize this is a trading range, they try to buy the breakout, because let's face it, when I was a rookie, that's what I did too, right? I bought breakouts. It was the easiest strategy to learn at first. They're not very reliable though, especially when the market is range, right? I wait for those buyers to try to buy off that pullback, and we look there to sell going back down into that trading range. Now, where things get a little bit more difficult is when we have a big explosive breakout, right? So what I've done is I've taken that trading range, and you'll notice I've created kind of a level 1 and a level 2, right? Level 1 and a level 2. Level 1 below, right? Level 2 is just below it, okay? So think of these areas. These are very, very important. If I go into level 1, momentum is not a very big deal. But if I end up going lower into level 2, yeah, now that momentum is a little bit more of a big deal for me. Okay, this is why range-bound markets, they're easy in theory, but you have to know kind of the way to apply this. So again, I know where I want to buy low. I know where I want to sell high. Let's talk about this. Let's say, for example, we run back down, right, and we take out that low. I want to buy going back into that range, right? We run lower. The moving average comes over. I wait for those sellers to take the bait, try to sell off that moving average. I look for a failure into a pullback combination setup going back into that range. Now remember, the failure pattern is very, very common. The pullback pattern, not as much in range days because you may not have enough space. Okay, you don't want to take that pullback if it's inside the range. Okay, it'll usually fail inside the range. Okay, now, what if we really dump though, right? What if the market really tumbles here? Then what? We're still within striking distance, right? We get a trend line coming down. Yeah, I'm still within striking distance now of going back into that range. But now what's the problem? Momentum. And when momentum comes in, now we've got to think in terms of the 2-try rule. Let them try twice. 1 try for the bears, 2 try for the bears. Let those sellers now. Well, first of all, anytime you see that much momentum in one direction, you've got to think they're going to give it a really good shot at getting another leg in the same direction. The problem is it's a range. Okay, so even though the sellers should not be selling, it's a range, right? They're still going to try. So you've got to give them the benefit of the doubt. Let them try once, get that higher high, let them try twice. Okay, now I call this a nested variation. The word nested, right? Like those Russian nested dolls, right? Those nested Russian dolls, right? There's a doll inside of a doll inside of a doll, right? We have this failure inside of a failure. Okay, and again, it's because of that momentum. Okay, so again, we sit inside the range, stay away from it. We run lower, failure, back up in. Or we sit inside the range. We get a nice strong run down. Still not a trending market yet, still a range market. 1 try, 2 try, back up into that range. Okay? 2 basic patterns, buying low. As we go higher here, same thing. Price runs up, moving average comes over. Buyers try to buy it in level 1, right? We now know it's failure into pullback, back down into that range, right? Failure into pullback. And again, sometimes that pullback pattern may not set up because it requires you to trade inside the range. Stay out of that range. Or we jump, right? We try to take out that holiday high, right? The Labor Day high. We jump up, right? Moving average comes over now. Nested. 1 try, 2 try, 1 try, 2 try. You want that lower low there. Let those buyers try twice. Let them try once. Let them try twice, right? And then back down into that range from there. Does that make sense? Right? It's all about what? It's all about momentum to determine which pattern. Now, speaking of momentum, what's a breakout look like? There's one very simple breakout pattern I always like to teach you guys in the newsletter, and that is the 1, 2, 3 breakout. Right? What's it look like? It looks like a 1, 2, 3 breakout. 1, strong move up. 2, pull back to the moving average. Very important we get that pullback. 3, strong move off the moving average. Because anything besides a strong move off the moving average, and guess what? It's going to probably fail and go back into that range again. So I want to wait to see that 1, 2, 3. If I can get that strong jump up, perfect. Now, mark up that high, mark up that high, mark up that low, and now we have our pullback. Now, this does not have to be a pullback. It could be a failure pattern, right? A 2-legged pullback pattern. We talk a lot about different patterns here so far. And again, you'll see all my favorite entry patterns for that particular, what I call a 1, 2, 3 breakout into hidden channel pullback. Make sure you take me up on that offer for that free trading course. That'll teach you more details about these specific entry patterns we look for. Same thing the downside, right? 1, 2, 3, coming off that moving average. Fine. Mark up that low. Mark up that low. Mark up that high. Now we know where we're going or where we want to be trading. I wait for that. Again, 1, 2, 3 breakout into hidden channel pullback. 1, 2, 3 breakout into hidden channel pullback. Great stuff there on the S&P. Let's keep going. And again, right, take that free trading course in the upper right-hand corner and see hundreds of examples of those nested failures, those 2-try failures, and those 1, 2, 3 breakouts. In the meantime, here over the Nasdaq is very similar to the S&P, but there really is one big difference, and that is that recent strong move down. Anytime we see a strong move in one direction, we know we're going to probably get another leg in the same direction before we get that run going back higher. Nasdaq is just like the S&P right now. It is definitely not trending, that is for sure. It is consolidated. It is range bound. It is what? It is balanced. And with a balanced market, we use that middle as the magnet. What goes down comes back up. What goes up comes back down. And of course, you want to use those same types of patterns, right? Not a lot different here on the Nasdaq except for that strong move down, right? So strong move down, we're going to probably get that next leg lower. You can probably anticipate exactly what strategy I'm looking for here. As we go lower here, is it a relatively shallow level 1 breakout? If so, I can use the failure into pullback combination, right? Failure pattern off the moving average, pullback pattern combination. Or is it a much stronger move down, level 2 breakout? Now we've got the, again, 1 try for the bears, 2 try for the bears. Again, it's all about momentum, right? Make those sellers prove it. Make those sellers prove to us they're in off 2 attempts. Then we know exactly where their pain is, and now we can buy right into their pain point. We can look to buy the pullback thereafter. That's the good stuff right there, right? That's the good stuff right there. We see this quite a bit right now, especially with these narrow ranges. Remember, stay out of the middle. Right? Stay out of that middle. The middle's always the nastiest place here, right? As we go higher here, level 1 breakout, moving average comes up. Buyers try to buy off the pullback. Again, it's not a trending market, right? It's a range bound market. Look back here, right? When price goes up, pulls back, tries to go higher. Watch out. Right? They're gonna sell right back into that range again. That is exactly the same pattern here we're looking for here on this Nasdaq. Or do we really jump, right? Take out that Labor Day high up around that 7,700. Do we really jump here right now? If we really jump on this, now we know what momentum is concerning. 1 try, 2 try, back down we go from there. Right? That's the key, right? If it really runs hot, now you know, respect the momentum of the bulls. I still want to sell this thing. I still want to short it, but I have to wait for my timing to be right, or else I'm going to get shaken out of good trades before I make any money off of them. Again, don't forget breakout patterns, right? 1, 2, 3, breakout. Mark the low, mark the high. There's your sweet spot right there, right? The combination of that low with that high, mark that high. And again, this pattern, right? That entry pattern could be a failure. It could be a pullback. It could be a trap high, right? Let's say there's a little swing right there, right? It could be a little trap high, right? One of my favorites is a trap high into a hidden channel combination. And again, you'll learn all about trap patterns, hidden channels inside of that free course I mentioned in the upper right-hand corner or linked below the video tonight on our trading blog. As we go higher here, right? 1, 2, 3, hold that pullback. Show me you mean it. We'll grab that new channel, buy the low of that channel. Now, obviously, this is not drawn to scale, but it definitely I wouldn't be upset if it used that, right? If it used that expanding trend line. That trend line's a great resource for us. We can get above it and use it as a level of support there. So very, very good looking chart here. I love range bound markets though, right? A lot of folks don't because they don't know how to trade them. The key to a range bound market is buying low, selling high, but it's not just that. It's understanding how to use momentum. Right? Because momentum really is the secret between which pattern you want to use. Do you want to be conservative? Do you want to be aggressive? And again, don't forget, tomorrow morning, 8 o'clock Eastern time, we'll do it all together. Right? I'm covering the basics right now. You can get a much deeper dive inside of our free course, right? Or just come out and trade it with me every morning at the opening bell in the trade room. How about some gold right now? How about some gold here? So gold is obviously bullish, right? We had, of course, that kind of Monday session here. But I'll tell you, though, with all the back and forth in the U.S. and China with trade talks and interest rates and right, it's no surprise that gold, of course, started this week off a little bit of a bull here right now. We can definitely see gold is bullish. Now, with this gold, the giveaway right now is that flat moving average. Right, that flat moving average really is the giveaway right now. Flat moving averages usually tell you there's a triangle or a rectangle, right? So maybe you want to call this a bullish, pennant or something like that. It really doesn't matter to me what you want to call it. We're not trending any longer. We have a bullish bias to it, but as you can see, though, we're now going sideways here, right, at these highs. So I definitely don't want to buy up here. I want to buy low. And to buy low, what you always want to look for is some support levels. So I marked up that high. I'm going to off that low. What a beautiful spot for a hidden channel, right? I call these hidden channels because not a lot of people are going to see them. And the reason why that's so important is because, as you can imagine, as we go lower here, you'll probably get a lot of sellers that don't know that trend line is right there. Right? And so, of course, once we go lower, the bears, they'll try to sell into it. And oh my goodness, you're selling right into the low of that hidden channel. Now, they might be successful. For all I know, they will be successful. I'm not a mind reader here, but I do know that when the market is this bullish and they're inches away from hitting that, right, that high over there, if we get a pullback, buyers are going to jump all over this, right, as they go. What I hope is, though, I hope I can use this trading range to project my buy zones, right? Level 1, level 2. I can use the hidden channel to further refine where I want to be a buyer, right? In all reality, though, look at this, what I call a reversal line, 44.5. That, again, I call these reversal lines prior levels of resistance that can be used as a level of support. And then why not? One more, right? Draw that trend line down too. So I'll tell you, hopefully we can sit here for a while, make that run lower, get those bears to try to sell it so we can buy off of all of these support levels and run right back up to retest the high. Now, again, a lot of this is going to be depending on what type of pullback do we get. Right? Do we get a shallow pullback here? Moving average comes over. Sellers try to sell it. And of course, what are we doing? We're buying into their failure, buying that pullback. Again, the pullback pattern, just be careful. You don't want that pullback pattern inside the range. Okay, that's the only caveat there. Failure patterns usually pretty common, right? Pretty reliable there. Pullback patterns definitely, as long as they put you in underneath that range. Okay, so just don't be too aggressive buying inside that range. That's why I call it the no trade zone. Or do we see a real sharp pullback? If it really slices lower, which could easily happen right now, we've had a couple big breaks at the beginning of the sessions here recently. If it really pounds lower here, yeah, now you know, right? It's a 1, it's a 2. You guys are experts on that now, right? Yeah, we do want to be a buyer, but we have to give what? We have to give those sellers the benefit of the doubt. Because anytime you see a strong move like that, you know they're not going to give up without a fight, right? They're gonna want to get that second leg. And if they do get that second leg, strong move down, right? If they do get that second leg, what is it? It's a 1, 2, 3 breakout. Or in this case, a 1, 2, 3 reversal. Excellent. Then what do? You mark up that low, mark up that low, mark up that high now, right? There's your sweet spot off that hidden channel. And we're selling off that hidden channel. Where's our target? Easy one, right? Back down to retest those lows. All right, guys? Again, stay away from that middle. Stay away from that middle. Wait to get it down. Failure, back up. And again, depending on how deep that pullback is it a nested failure? Is it a 1, 2, 3 reversal? Now, as we go higher here, right? Here's the problem as we go higher. We got to know where we're at. We're right up around these major highs here from earlier on, right? Or should I say kind of middle to late August, right? 25th, 26th, 29th. So we got a lot of topping action up top here. I definitely don't want to buy high. We know we're bullish, but I don't want to buy high. So what's the plan if the price goes higher? There really are two setups. One will be reversal, My favorite reversal pattern, the one that I always look for in the trade room, is the crown reversal. We go up 1, we try 2, 3, trap high, and sell back down, right? I call this a crown reversal. We start off by going higher. We then pull back once. The buyers cannot retest the high. That's the key. They pull back. They try again. They get a trap on the second try now. That trap is what I call a crown reversal. Okay, now there might be other nicknames for it, but I call it a crown. Okay, so again, strong move up. Buyers try to retest once. They fail. Lower low. Buyers try it again. Trap high. Nice strong signal candle. Sellers are dumping it off the high. Just remember, when you're going against the trend though, you got to, well, what I always do is I always go, a quarter position, half size position. So if you're trading 4 contracts with the trend, I'm trading 2 or 1 against the trend. You know what I mean? Right? Just remember, you want to really load the boat when you get your pitch, right? Nice fastball down the middle, whatever your trade is, load the boat. But when it's and again, I'm not saying it's a marginal trade, but because it's against the trend, you're not going to have as much reliability. Okay? And because counter trend trades have potential to really run for you when they do work, you can get away with a half size position. Right? You'll get a much bigger winner on a lot of counter trend trades because of that reversal. But because it's counter trend, better idea, half size, quarter size, third size, right? Smaller position size when you're going against that trend. Okay? How do we go higher though? What would be some things to keep an eye on as we go higher? As we go higher, I've got to get proof. I really can't be a buyer up here. There's not much space. Right? So what I need a 1, 2, 3. I do. 1, 2, 3 breakout, mark up that high, mark up that low. I need to see some sort of proof. And in all reality, it really should be 1, 2, 3. Real strong breakthrough. I've got those highs. I've got to see proof that they want to keep buying to that high here. I'm really not in a position to buy unless I can get up through that high, get that 1, 2, 3 breakout, get that pullback, and buy off that low. You can try to get maybe a trap in here, something like that. You know what I mean? You can try to get a 2-try breakout with a trap in there. That'll be very, very tight. Again, I would look for either the crown reversal, which again, go half size position on something like that, or the 1, 2, 3 breakout. If we run up and go sideways, don't be surprised if they can take this range and move a little bit higher there. If we do sit it sideways overhead, same thing. 1 try, 2 try, right? Failure pattern, buy up off that low. So if we do end up kind of moving that range up a little bit, it's the same basic strategy, just at a higher entry price. That's all. Gold, looking good here. We know to plan on gold. How about that euro? Euro is another example of that snapback here for tomorrow's trading session. We started off on Monday with a holiday. Market moved lower. We tried to stay down there until, of course, this afternoon, actually middle of the morning here, right? We get a nice strong 1, 2, 3 breakout into another range, right? So it's very, very obvious right now this euro is bullish. We know where they're trying to go, right? They're trying to go back up to pretty much where the day began, right? Or sorry, where the week began. I know we weren't trading on Monday, but because Monday's volume was so low because it's a holiday, a lot of people who were not trading, they're going to look at this market and go, I'm not going to sell down here. It's way too low. But then once the market starts to come back up, right, buyers will start to pile on. Usually we'll go back to retest that high before we have to make any more difficult decisions as far as do we keep going, do we reverse at that point. So we'll know more at that point. Right now, we do know one thing for sure. We do know we have a bull market. We do know we have a trading range, right? Flat moving averages, double tops, double bottoms here. And in all reality, there is potential this might play out to be a channel. So I think the most important thing right now is, we want to buy low. We want to sell high. We want to stay away from that middle, right? Take the trading range, level 1, level 2, Level 1. Now, I don't need level 2 up here because it's a bull market, right? So I don't really care about level 2. If I get to level 2, right, through the highs here right now, that in my book is broken free of that range. So I don't need to worry about a level 2 as we go higher here. I do want to be aware, though, of a level 2 as we go lower, right? As we pull back into that level 1 breakout area, I'm looking for a seller failure. Looking for that failure so I can buy going back in. Or do we really tumble, right? Really tumble. Now want to see the 1, the 2, and then back in, right? So very, very similar situation. Very similar pattern that we saw on gold. You can probably also draw, right, that trend line across the high, trend line across that low, right? There's your hidden channel. We get that strong move down, right? Moving average comes over. Sellers, of course, try to sell it. We're looking now to buy into their stops, right? Buying that pullback. Again, as I mentioned previous times or before, just make sure that pullback setup is not inside the range. That's the only part you got to worry about, right, on that pullback. Love the opportunity here to buy that pullback. If we go sideways here, just sit on hands. All right, if we go sideways here, just sit on hands, wait for the market to pop lower, get that failure, and buy it back up. Or, right, if it really sinks, right, nested 1, 2, and then back up into that trading range. Again, it all depends on how the market pulls back. Now, what if it keeps going higher? If we keep going higher here, I'm really kind of curious what that's going to look like. If it's a relatively shallow break higher here, I'm honestly not opposed to marking this as a new high, marking that as a new channel, right? Mark up that high, mark up that low, find that channel, waiting on that pullback, and then, of course, trying to get that, right, failure into pullback combination. This, of course, will have broken free of that range at that point, right? So imagine now we go another big strong leg higher here. We break free of that range going higher. We mark up that high, mark up the low, right? Now that becomes a new channel for me now, a hidden channel as I call it. Moving average, of course, right? When I get back down to that low, look for those sellers to try to sell off that moving average. And of course, looking for that failure, right, into pullback, and then pull back, going back up to retest those highs. We know where our target is, right? Our target's up top, right? Target's up top around that 10,000 area. What else could we do here? If the market runs, if the market really runs higher here, look for that 2-try breakout, right? That FOMO breakout, 1 try, 2 try. I would definitely, in this situation though, a lot like gold, I'd be worried about those bears coming in, and so I want to use a trap pattern here to avoid buying too close to the overhead levels of resistance. So imagine now, right, it's a strong move up, very similar to this one, strong move up, bears try once, bears try twice. There's your trap. This is a great little scalp setup. We love these in our trade room, right? You can see the difference there, right? Very similar, right? There's your 1, there's your 2, right? Same pattern there. So imagine we break higher here, right? Again, you don't want to chase after it. Buy that low. Again, targets up above, right, at that prior high, that Labor Day high there. All right, guys? Now, the other option, the euro is if we collapse back into that range. I mean, let's be honest, right? It's a very strong dollar right now. They're talking about cutting rates in the U.S., right? So there's definitely potential. A strong dollar could send this thing right back down. 1, 2, 3, back down into that range. This will be interesting because if it does go literally 1, 2, 3 smack down into that range now, we'll just keep playing this game, right? Let them go sideways, wait to sell it, 1 try, 2 try, and we'll sell it back down again. So if we come out tomorrow morning, for example, and we see this thing is back inside that range, that prior range, don't fight it. Don't fight it. We're back. We came from the beginning of the week here. 1 try for the bulls, 2 try for the bulls, range-bound market, right? Let the buyers try once. Let them try to buy the pullback, sell into their stop losses. Opposite side of that range, right, is our target. So that's kind of the only tricky part here on the euro is if we end up back into that range, from earlier on in today's trading session. But I'll tell you though, get a great plan here for tomorrow. We are locked and loaded tomorrow morning and every morning at 8 o'clock Eastern time. So hopefully I'll see you there tomorrow as a brand new member. Just make sure you get there on time, because we always start off every morning's trading session by going over all the rules and all the patterns right at 8 o'clock Eastern time. So get registered, get there on time tomorrow. And by the way, to get registered, it's very, very easy. Right below me here tonight, on the homepage of our website. If you're on the blog right now, there's a big blue button right below the video tonight on the blog right now. If you're on YouTube, I'll put all the links in the description of the YouTube video. So if you're on YouTube, hit the description. If you're on the website right now, it's right below me, right? Grab that advanced course. The advanced course is our premier membership package. It includes all access, everything that we do, daily trading sessions, ongoing support, all the video lessons, all the tools. You can learn more about all the perks and benefits by watching the video right behind that link there on the homepage. But don't forget too, if you're not ready yet to be a client, maybe today's your first time here, definitely check out the free trial. Everybody seems to love the free trial. I really enjoyed making it for you guys. The free trial, of course, includes your free trading course, your free pass to our trade room, hundreds of examples of how we apply these setups to our favorite futures markets. You'll love that free trading course. So get registered. And if you have any questions, any problems, any issues along the way, please don't be afraid to pick up the phone. I'm not a very mean person. I'm a pretty nice guy, right? I promise I won't bite. Don't be afraid to call me in the office, right? I promise I'll be nice, easy to work with. Ask me a million questions. I'll get you on the right track. Call that toll-free phone number. Use that live support tool, right? And I'm standing by to help you guys out. It's true. I don't bite. Maybe in the past I have before, but not these days. Not in my old age these days. I've mellowed off the biting a big time. I'm kidding with you. Guys and gals, excellent day today. Great video tonight. Drop me some comments. Hit me a thumbs up. Get registered. And we'll see you tomorrow morning at the opening bell. If not, come back and see us again tomorrow night. We'll do it again tomorrow night for a hump day edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.